Hey guys, and welcome back to the Ginger Realtor Show. It is Monday, which can only mean we have Kim Curtis from Cornerstone First Mortgage for Mortgage Mondays. Kim, thanks for joining us.
Thanks, Gavin. Great to be here.
Now, Kim, I'm assuming you guys do more than just first mortgages. You'll do seconds and holiday homes and all of that, yeah?
Absolutely. As a direct lender, we do all of those.
Okay, guys, don't forget to smash that like button, subscribe, put on alerts. This is great content. Nobody wants to know more about mortgage than you guys. Okay. So last week with Mike, we talked about getting prepared for applying for a mortgage. This week with Kim, we're going to go through the mortgage process from your application through the various stages of processing to being at the back end when you get your clear to close, which are the best words in real estate. So Kim, let's go through what you need to do that initial application for your pre-approval.
Sure. So the application process, so once you do the application, which we call, it's a standard application in the US, it's called a 1003. So that's a universal application. So it's very, very short and sweet. It's very quickly, I just want to make kind of like there's really kind of two ways that people do mortgages and lending in the industry, and direct lenders, the way we do it, in my opinion, is the better way. A lot of the online mortgage people that you read about and hear and see all the ads, they'll give you a pre-approval with basically just like almost like no information. But direct lenders such as Cornerstone, we actually do a lot of the request a lot of the documentation up front. And the reason that's beneficial is because when you get a pre-approval from a direct lender such as ours, we've done a lot of the homework and the background checks and all the stuff as far as financials and assets, instead of just taking people's word for it. So basically you do the application, it goes into our system. I call it, we kind of scrub it. And those are basic things like name, social security, or if you're a visa, those kinds of things. And a subject, like the property subject that you're looking, that if you have one, if you don't, that's fine, but property subject that you're looking, very interested in, and the approximate value of the home, and your income. So once you get you get your pre-approval, then you're really working with processing team and your lender on documentation gathering. So the way we do,
let's just stop right there, because you're about to
Sure.
go through the whole thing, and we're going to be clear to close before I get to ask a question.
Okay.
The reason you get the pre-approval from a trusted lender is because not all pre-approvals are the same. Like
Correct.
For me personally, I only like to work with a company and a mortgage provider where I know that pre-approval is going to close. There are so many companies out there will provide you with a limited dot pre-approval, and then you have troubles once your offer's in and you're finding that you don't approve, you don't get as much money as you thought you were gonna. You need more down payment. Your rate's different. So
And you can tell the difference, Gavin, because it says in the little letters at the bottom, based on, and then it rattles off all these things, right, that haven't been documented. That's not what you want. You want a pre-approval that says that assets have been verified, income has been verified. Those are the pre-approvals that you want to work with the lenders that provide those.
Okay, so let's talk about those bits. Okay, so obviously a mortgage company wants to know how much you're worth, how much you make.
Yep.
What documents do you receive
Sure.
to be able to verify that?
Sure. So again, some lenders give you, I call it a canned. What do you call it in Britain, right? We get it. A lot of lenders give a canned, like, here's 20 items that we want.
So I'm going to stop. I've been here for 23 years. I'm 48. I've been here nearly as long as I was in the UK. So
I know, but I love your British, I love hearing what you guys do over there. So anyway, so our
canned, it'll be tinned in the UK, canned in America. Okay.
Okay, so there you go. A list that they give to all clients. We don't do that. We only ask for the things that we need to verify. So for example, our company is also, very technology heavy and based. So there's a lot of times that we can verify income without asking for pay stubs.
So that means you're able to link into something like Paychecks or ADP.
Or bank accounts or into Chase. completely safe, right? Like, so we can look at the direct deposits. There's a way to verify that. So that's huge, because who wants to schlep and, and scan and send in all these pay stubs? So that's number one. Number two is tax returns. So most people have to provide 2 years of tax returns. Again, you can either send those in. The problem is it has to be the complete tax return, which can be 60 pages for some people, 90 if you're self-employed, has to be your Schedule Cs and everything. Or you can also sign a document saying that we can request them from the IRS and get them directly. So again, huge help, just saves like hours worth of work for your clients and my clients.
No, that makes sense. I mean, look, people want to go off and do their job. They want to go off, have their life. They want to go
That's
look
right.
at houses. It's a pain in the ass, let's be honest, to have to go and try and get your full tax return for the last 2 years. So
Right.
the fact that you can grant the permission to pull that from you guys is hugely helpful. So that's tax returns. We've got proof of earning. We've got employment, because you're going to be able to see that in the documents from the bank. What else are we looking at?
Debt. So everyone has debt. Debt.
Oh, debt.
Debt.
Okay.
Not death, debt. So I have not met anyone yet in all of my years that doesn't have some kind of debt. Not one person. So so that's why when a lot of probably the biggest thing in all these years that I run into is people say they don't want us to pull their credit because it'll hurt their credit and everything. That's not true.
So let's talk about that, because it's everyone thinks that it's going to drop their credit by so many points.
No,
and it's going
it's
to ruin
nominal.
their credit.
It's
I think it takes what a pull for a mortgage pulls what 2-3 points.
2-3 points. And the other thing that I'll give you a little tip. Another thing is, if your clients are shopping around, then they should have all those pulled done within like a 10 to 14 day period, like do it all at once, because then it only hits once. The other thing is, on that credit pull, it shows who pulled the credit. So people know, right? Even though it dings you a few points, it shows why. It's because you're trying to get a mortgage, right? It's for a good reason. You're not trying to get, a $10,000 new credit card. So that's just been a very, very, probably the biggest misconception. The reason why it's so important is because no lender can give you a mortgage without pulling your credit, period. You cannot complete the process. So do it now, do it later. My feeling is do it right up front. And then honestly, know your credit and your debts up front, because you'd be surprised at people that they're like, oh my gosh, no, I paid that off, or that's not correct, or I paid that medical bill, or whatever. And we're like, no, it went into collections. So that if you have a really solid understanding of your debt, huge help.
Now,
really
is
helps.
medical debt still considered when applying for a mortgage?
So that's a great question. Medical debt is only considered against you if it's gone to collections. So if you owe, it doesn't go against like your balance, right? So if you owe $10,000, on a car, but you owe $10,000 on a medical bill, those are not equivalent. But if you let your medical bills go into collections, then that gets reported.
Okay. And what about student debt?
Student debt, another great question. Know your student debt, especially during coming out of COVID. A lot of people, froze for, a lot of your people don't know all the terms. So I'm going to try to use, right, like for new first-time home buyers, froze their paying their student loans, right? And so they deferred, there were a lot of different options. Know where you're supposed to be in that process, if you're supposed to be, current, if you're still in compliance and those kinds of things, because student debt is a debt. We look at how much you owe per month, and that, that there's a ratio, and that goes against what we're looking at.
Would that be the debt to income ratio?
Yes, so that goes against your debt to income ratio, correct?
Okay, guys, one of the good things that I'm doing as many of these videos as I can to get as much information out there Tomorrow's Tuesday talking point is going to be with Matt Marinoff, who's from the Real Estate Resource Group, and he's going to be looking at helping homeowners who have debt, who maybe have fallen behind in their mortgage process, which is the opposite side of the spectrum from what we're talking to Kim about. But I just wanted to plug tomorrow's video. So, okay,
And
so
it's very important. It's a very important thing to understand.
so now we've filled out the documents. I've sent you my tax returns. You've got access to my bank account. You can see that I'm getting paid. You know what my debt to income ratio is. What happens now?
Okay, so the next thing is it'll go into underwriting. So once you have all the documentation that we've asked for, it'll go into underwriting. Underwriting is kind of this black hole of people kind of don't understand underwriting. We can talk more about that later, but it goes into underwriting for review. So that's where kind of like the official review of the documents. If they're legitimate, if they're fraudulent, verification. If there's some that weren't verified, then we do have to have people call and those kinds of things. So underwriting is really looking at statistically, is this a good loan? Is this something that we should be approving? Should we be loaning these people this amount of money based on their assets and their debts and their income?
I think the only time you should say absolutely yes, I'm loaning this person money is if it's one of my clients.
I think you're right.
Okay, so
you're right.
So let's go back. We've got the pre-approval. You've issued that. Yep. We're off finding houses. Look, I'm a big fan of going through the underwriting process and getting to the point where you have a full on approval pending property. So that means you can close a lot quicker, which in the market that's coming, and we'll talk about this later in the year as it heats up, it makes your offer almost as good as cash, because then all you have to do is do your appraisal and your inspection and you can close.
That's right.
So looking at houses, I found the house I want. We're doing the underwriting, which is if you've ever watched Stranger Things, the underwriting is the upside down.
Right.
And when it comes back out of the upside down, then we get the greatest words in
all of our world, all of us, right?
Which is the clear to close.
Clear to close. So your word is clear to close. In my language, it's called we issue your commitment. So there's a big difference. We could have a whole talk at a later date about your pre-approval versus your mortgage commitment. So then you get everything, every underwriting, it comes back, stamp of approval, and you are given your commitment, which is your clear to close.
Yeah, so when you're looking at the purchase contract, there'll be a number of different dates that you have that are performance-based dates. So you have X amount of days from the contract being executed to have the money into escrow. You have in New Jersey, you have a set time to be in attorney review. Then if you're adding any additional deposit, that has a set date. But one of the key dates on the process from offering to accepting to closing is that mortgage commitment date. That's the date where the bank have said, yes, you can buy this house. The seller of the house is like, oh, that's a relief. I can sell my house. I can start boxing things up. But that's the date where, from a mortgage contingency perspective, you can no longer back out of that deal. Like, you've got the commitment, like you're closing.
Right. I mean, really the only way in a general sense, really the only way, out of a commitment is if, you lose your job. Yeah. And you can't find another one, it's exactly, or there's been fraud or something, but that is our commitment to your sellers, or to the sellers, sorry, or the buyer. We are going to lend you this money, because we've done our fiduciary duty. Okay. So, so those are the words that we want to hear is, the commitment has been approved, and yours is, then we get the clear to close.
Yeah. Clear to close, the music to my ears.
Yep.
That's underwriting are happy, title are happy, inspection people are happy, your clients are all happy.
That's right.
And now that's when, from my perspective, I know I'm getting paid. Like, it takes a lot to be clear to close and not close.
The other thing, I forgot one. The other one I'll mention. So the big ones are if you lose your job and can't find another one like that, we've actually had clients that have lost their job, but they found one right away. And again, we can talk about a whole session about that. As a direct lender, we can take an offer letter with a start date. It doesn't, you don't have to have started the job, which is very different from some of the bigger banks. But the other thing is, don't go out, please, between the commitment letter and closing. Please don't go and buy a huge fancy car or $10,000 of new furniture.
That was something that was coming on.
Yeah.
But once you've applied for a mortgage, you should not apply for any more credit without speaking with your mortgage person. Look,
Yes.
you may have an excellent debt to income ratio. You may have a stellar credit, but if you decide to go out and buy a new Mercedes or whatever you want to buy as far as a car is concerned, that's going to impact your credit significantly. So before you go out and make a decision, even if look, your car breaks down or your blows up and you're waiting for stuff,
Call me.
Like, yeah, call Ken,
Call
say,
me.
hey, look, this is what's happened. I need to go out and buy a new jet. Like, okay, go buy your jet. I'm sure you're okay. But no, but seriously, once you've applied for you've got your pre-approval, think of your mortgage advisor as your credit guardian. Like, they're the people who you don't do anything credit-wise without speaking with them.
I mean, and I'm on your side. I am looking out for your best interest. So I'll give you a very quick example, true life story. About 2 years ago now, exactly that. Client, the lease was up. They turned in their car and they're like, oh, well, we just got another lease. Well, the problem was they went from a $500 a month lease to an $850 Range Rover lease without calling me. True story. And it impacted their debt to income ratio so much that they now couldn't afford the house that they had been under contract with.
It's crazy.
So no one, listen, I don't want to be in that position. You don't want to be in that position. And I don't like to be the bearer. As Gavin can attest, I want to be the happy one showing up with champagne at the closing. I don't want to be the bearer of bad news.
Look,
So
I'm going to be honest, guys. If you lease or buy a Range Rover that tanks your deal, I'm going Soprano style on you. I'm coming over with a baseball bat, and it's going to be not such a nice Range Rover. I'm going to be honest.
I had to kind of, I have to say they were a younger couple. It wasn't done, what's the word? It wasn't sneaky. They just like, they didn't call me and they just didn't ask. They made an assumption, a very bad assumption.
And I think one of the big ones people do is they've got their mortgage commitment. They're 10 days from closing. They've been to their house. They know their spaces, and they're like, oh, let's go get that awesome leather sectional that we saw at Jennifer Convertible or whatever it is. And it's like, oh no, we're not going to buy it cash because we need our cash for closing. We'll just put it on finance. And that like even something like a sectional, $2,000-$3,000 sectional can really
100%.
impact your credit and can stop you from closing. I've seen it.
100%. Absolutely.
So, okay.
Just call me, please call. We're here. We're on your side. And I would say, and no question is stupid. No question is so like, I would rather you call me and me say, absolutely.
She tells you that. She says that no question is stupid, but she'll call me and like, you have no idea what they just said.
I mean, the Range Rover one was a little surprising, but I'd been working. Here's the thing. I really get to know my clients. I have a very advisory type role with them. And so I think I was more upset and that they didn't call me. I'm like, why would you? It was almost like, right, a parent. Why wouldn't you, big sister, why wouldn't you call me? And it's a 2-second phone call. So yeah, no big purchases. The other thing too is the mortgage lender has the right to run a lot of people might not know this. They have the right, because we're the ones lending you the money, right? Like it's to run your credit right before closing.
And they do.
We have the right to. I mean,
yeah.
Yes. So that's the thing where they're like, well, how did they know? I'm like, because it came up on your credit report.
So look, let's just do a quick run through.
Sure.
You decide it's time to buy a house. You've got your finances in gear. You make the application. From that application, just freeze your life until you found a house, unless it's taking you years. But most people should be able to find a house pretty quickly. So you get your documents in the KIM. That's your tax returns, your income verification, your debt kind of stuff. That goes off to underwriting. Underwriting does their dark magic and decides whether or not you're going to get a house. And they say, okay, yes, we're going to give you your commitment. We're going to lend you this $500,000.
Yep.
Okay. Still, life is on hold. You're not doing anything. I found you a house. It's lovely. It's got all of the monochromatic bullshit that everybody seems to like, but I hate. And now we've done the inspection. We've done the appraisal. Appraisals come in and it's over appraised and we're all happy and we're going to close. It's going to happen. Still, don't get that sofa. Don't get a new car. We get to the point where we have our clear to close, which is generally 3 to 5 days before the actual closing day. TRID's issued, so now you have the truth in lending disclosure, so you're closing, and now you've closed, and now you've bought the house, and now I've turned up with the champagne and whatever closing gift I'm doing for you because I learn my clients and everyone gets a different one, and now you can relax.
Right.
Now
Can I add one more little tidbit real quick?
You can add.
So the only other thing I would say is make sure, this has happened numerous times, when we as mortgage lending companies ask you to sign up on the documents, the closing documents, it has to be done in a timely fashion. That is not our rule. Those are laws and regulations. And I have seen people not, oh, I was busy at work and we had to push off the closing date because depending on your state, they're all different. You have to do that within a certain amount of time before the closing. If that doesn't happen,
I'm going to back Kim up on that one.
it's happened.
If we get to a point where I'm chasing you to fulfill your dream of home ownership, we've got an issue. And it's beyond, like, I can understand people forget, but like when your mortgage professional sends you documents they should take priority. I'm not saying unplug that kid's life support so you can fill out the documents and plug in your phone so you can get charged, but take care of it as soon as you can.
When we say, here's what I say. When we say this has to be signed before midnight tonight, like before you go to bed, there's a reason. And it's there. So it could literally push off the closing date, and that's not on us, that's on them.
Okay. Kim, this has been absolutely fantastic information. Thank you very much for stopping by.
Thank you for having me.
Guys, that was Kim from Cornerstone First Mortgage. We do not potentially have a Mortgage Mondays next week. I'm in the UK visiting family, and it's all going to depend on whether my brother has me at a pub during recording time. So it may be back with Kim in 2 weeks. But Kim,
I'm happy to do it in a pub with a
okay,
beer.
maybe we'll be in a pub. But guys, thank you very much for tuning in, and we'll